Hi everyone, welcome to the Timing Research Show for November 2nd, 2015. Today we will be discussing the 110th weekly report from Timing Research. So if you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports and you can download this or any past report there. My name is David Kosmeter. I am the creator of TimingResearch.com, and I have Wiz from Top Gun Options moderating for me again this week. So I'm going to go ahead and turn it over to him.
Okay, great, David. I appreciate it, folks. Thanks for having me, and have a lot of great stuff to go over this week, especially big week, obviously with Friday payroll and a lot of stuff going on this week. But let's just go around the horn real quick and go through who we have on board. So Kurt Capra from Pristine and AJ Brown from TradingTrainer.com. Kurt, why don't you tell us a little bit about yourself, your background, and what you do at Pristine?
Well, thanks for having me again. Great to be back. Pristine really just focuses on price action as it pertains to the technicals. That's what we look at. We don't get caught up in a lot of the more subjective tools in that they're all looking at price at the end of the day. And so if you can just understand what's happening through price, you don't really need anything else to see where the market is headed, or at least suggesting where it's headed in that moment. So that's a large part of what we do. We have webinars that we offer, multiple webinars a week, and that's what our focus is on.
Okay, great. And obviously, AJ Brown from Trading Trainer. AJ, tell us a little bit about yourself and your background.
Hey, thanks for having me back. This is AJ Brown, and I'm from Trading Trainer, and we have focused on options for 12 years now. I've been a trader for over 20, and the reason why I love equity options is just because with all the different tools in my tool chest, I'm able to profit whether the market's going up, down, sideways, whether volatility is changing, or if time's just passing by, and I just love being able to trade whatever the market throws my way. So we have programs at Trading Trainer where we help people build the skill, and I've actually been having conversations all morning with folks about how it is a skill, and so we really like to focus on getting that skill internalized, have it be unconsciously competent for people. So that's what we do.
That's great, man. Love it. That's a man after my own heart, so to speak. Let me pull up my PowerPoint real quick just to, and I'll screen share it with here. My name's, as David said, my name's Matthew Buckley. My parents did like me. They didn't name me Wiz, but I earned that call sign flying the Hornet for about 15 years for the Navy. Graduated from the Navy Fighter Weapons School that many of you know as Top Gun, and flew about 44 combat sorties over Iraq. Taught myself how to trade equity options. Before Al Gore invented the internet. Literally had to go to the library on the Naval Air Station. Why? Just because I was always interested in investing, and remember doing my first trade out of college as I was commissioned an officer in the Navy through USAA brokerage services, and I think the commission was like $250. I still have that trade ticket somewhere in all my files. It's just shocking to me. But self-taught options trader, and eventually I popped up on the radar of one of the largest volatility arbitrage options firms in the country, Peak 6 Investments, headquartered right there in the Chicago Board of Trade. Did that for about a year and a half, and then started the Options News Network, ONN.TV, which was a blast. We shot on the floor of the CBOE and the CBOT, giving retail traders and investors kind of a behind-the-scenes look as to everything that AJ just talked about, giving some inside intel to try and kind of even the battlefield, so to speak, because I know it can be a little off kilter, so to speak. So, all right, gents, I'll tell you what. Let's go ahead and
I think Jim's on now.
Oh, Jim. Okay. Hey,
Yep.
Jim. Welcome aboard, man. Why don't we got Jim Kenney from OptionProfessor.com. So why don't you introduce yourself? Tell us a little bit about yourself.
Sure, what we're doing over there. Again, I'm Jim Kenney, and I provide the content for Option Professor. So basically, they have educational DVDs, and I was the gentleman who put those DVDs together. So that's the long and short of what I do over at Option Professor. And basically, it's an education firm going over the uses and risks of all the different strategies that we can go over, from income strategies to cash flow strategies to hedging risk strategies to obviously spread, all the different options strategies, which we put DVDs together so people in the privacy of their home can go through all the different ones and find out the use and the risk and what might be appropriate for them and what may not be, that kind of thing.
Awesome, Jim. Thanks for coming in and joining us. All right, fellas, let's go through our questions here. We'll start with question 2 in kind of reverse order there. And we'll go Kurt, Jim, and then AJ. We'll just do it in that order, and then I'll follow up after all you guys. Based on any technical, fundamental, empirical, or just gut indicators you want to use, what would you predict that the S&P 500 index is going to do by the close on Friday? Move higher or lower? And do me a favor and give me your confidence level, kind of a percentage. So, Kurt, over to you.
The way I see it right now, it's a tough call, just in the sense that we have had this incredible rally from late September, early October that kicked us off, and here we are now back to the earlier breakdown levels from mid-August. So we've definitely kind of gone full circle in that sense, and then last week the market was largely sideways. So the fact that it's kind of been a slow grind higher leads me to believe that we're going to just continue to slowly move higher. I mean, I don't see anything, unless you get at the end of the week a jobs report that really shakes things up. I'd say we're higher by week's end, and I'm going to go with a 90 to 100% confidence level on that, because that's what I'm being told right now. Until things change, I've got no reason to think otherwise. So yeah, maybe midweek we get some kind of reversal. If we close green today and then we're gapping under the green bar tomorrow, that could send us back down to lower levels, maybe around where the 20 MA sits. But that's not the case right now.
Mm-hmm. It sounds like you are a climb the wall of worry type of guy, to use an old meme that everybody can speak, kind of worn out. So, okay, with a 90 to 100%, man, coming right off the turnbuckle. Jim, how about over to you?
Well, obviously, we're just taking guesses here, as we always do. Markets sometimes can reverse on a dime here. You did go down, 2,000-3,000 points on the Dow, and now we've come up 2,000 or 3,000 points, all in about 60 days. Yeah. And the VIX has gone from 15 to 55, back down to 15. So to talk with much certainty is very difficult, obviously. On the good news, obviously, you're making some new highs here, but we are into that region of 2,100, 2,150. They do look like they're squeezing the shorts pretty good, just like they wiped out the longs on the drop. And so basically the question is does it have legs up here or not? And right now it does look like it has legs, and the only things, well, not the only things, but a couple of things that are a little bit disconcerting is the Russell has a 200-day moving average of 1215, and so at 1176 the Russell has not gotten above its 200-day moving average, and the New York Stock Exchange Index, which is also a wide range, it has many stocks in it, right? 2,000 stocks in the Russell, and the New York Composite is also a big one. That's trading at 10,530, and the 200-day average on that comes in, I believe, about 10,700 and change. So what am I saying here is that the market is definitely strong, and it definitely has done some short squeezing and had some buying come back in here as the optimism has turned. So right now, between now and the end of the week, it looks like it wants to go higher because we made new highs here today, but the caveat on it reversing might be is that some of the more broader-based indexes have not taken out their 200-day averages, and like the other gentleman was saying, if they throw any bad news in here later in the week, since maybe some of this has been short covering, if the sellers were to come in, maybe there's not enough buyers left up here to hold it up. So you'd have to be pretty cautious here. Either way, if the news changes, it wouldn't shock me to see a sharp pullback. However, you got to respect the tape.
And we all know that markets go down a hell of a lot faster than they go up, and we kind of have been climbing this wall of worry since that double bottom, and we've kind of seen it hasn't been a rip your face off rally back to the upside here, but it has kind of been a everybody kind of looking around at each other like, you believe in this? Okay, but it's somebody else fire, man. We might be heading down pretty quick. So, okay, Jim. AJ, how about you, man?
So I was going to say something similar. I always use the bear jumping out the window and the bull climbing up the stairs, and these have been some steep stairs that we've been climbing up, and there hasn't been any real pullback to where we could kind of reset and take a breather and come back up. So there's a fear of exhaustion, especially as we get up higher. So I'm probably going to go more. I've been watching the last week, and I've been watching as we've had sideways motion. And I've been watching as in the beginning it was sideways motion because nobody was participating. They were sitting on the sidelines just watching. Now you're starting to see the bulls and the bears come head to head. And so I'm actually going to say it's probably going to be a little bit lower. And my confidence on that is just 5. And I mean just a little bit. But I would like to see it actually retrace even more if we're going to continue higher through that overhead resistance and not get stuck in that channel that we've been in since February, if not November of last year. So I actually am going to vote that it's going to go a little bit lower by Friday, but I don't think it's going to. I think it's going to be push-pull all week. And then again, I agree with those guys. All bets are off if some bad news comes around. It could we could see the bear jump out the window again.
Jim, what was your? I'm sorry, man, I might have missed it. What was your up or down by the end of the week in your certainty?
I would say that it could roll over by the end of the week, but my certainty would be no more than 50-50. So would that be a 5? 5.
There you go. All right. Well, we got 2 5s. Let me pull up.
It's hard to trust one side or the other in this kind of an environment.
I couldn't agree more, man.
I can't help but plug options because I don't care which way it goes. I'm going to make money anyway.
That's exactly right, man. So just real quick, there's the implode. You guys can see my screen, right?
Yep.
Okay, there's the implode. Here's China ending the world, and then of course China not ending the world. So and then this tight trading band right here was going into that Fed meeting where a couple people thought she might have raised interest rates, and of course she didn't. This pop, in my opinion, was a yay moment. Hey, well, she didn't raise interest rates. And then I told my traders, I said, there's going to be a boo moment. And the boo moment is, well, holy crap, she didn't raise interest rates because she's a hell of a lot more concerned that China, Europe, and even here in the United States isn't that good. But this wasn't going to be the Fred Sanford, the big one, Elizabeth. So this double bottom here, that we've bounced off of, that's a pretty big rally through the 50-day. Everybody sold and looked around and said, now let's take a little bit of profits. Bounce. We went through that 200-day moving average, gave a little bit back. Same type of thing right there where we're like, well, okay, let's take a little bit of profits and then bounce. And we are back up at these, pre-China ending the world type of levels. Couldn't agree more with all you guys about the back and forth trading. Usually when we see these days where we get a, kind of a, well, we're still up triple digits. Nah, I'm not going to say rip your face off rally, but hey, any triple digit around the Dow or up 16 on the SPOOs on the S&P 500, usually right out of the gate a strong Monday like this in this type of market, I see us selling off a little bit in the Friday. I'm going to disagree with you guys a little bit on a bad Friday jobs report. I still think we're in bizarro market. If we get a bad Friday jobs report number, I think, exactly. I think in bizarro market, my definition is good news is good news, bad news is good news, and awful news is phenomenal news, because that's going to let us know that Ms. Yellen or Grandma's going to put a Band-Aid on her boo-boo and kiss us on her head, and nothing bad's going to happen. So, I mean, we're looking for a consensus of 179, man. I mean, my God. So I think we're lower by the end of the week, not by much. I'm not going to stick with unchanged because it's physically impossible for the market to be unched on the week to the decimal point. So I'm going to go lower, and I'm going to go with a 0.8 delta. I think I'm fairly certain of that, and I don't like hosing off real capital or putting a bomb down range unless I'm pretty damn certain. So any follow-up around the room on that before we get to the next question, which is going to be, what are you looking at for the week? And I kind of lob my answer into that one. Anything else on the up, down, sideways, and percentage? We good? So, since I stole a little bit of thunder there, I'll give it back to you guys. Let me go back to Kurt. What are you looking at this week, man? So for indicators, or we got your confidence. What are you looking at this week? Developing events? Are you going to be watching out for in this trading week that might have a positive or negative impact on the S&P 500, U.S. markets? Or I think it was Jim's point to the rut.
I don't see right now's environment, at least from a daily point of view, being all that great. To initiate new positions, looking to hold for the next couple days, unless it's doing something like options, where you guys have already said it really doesn't make much of a difference. I mean, you could pick a level and say, hey, I don't think it's going to get back under this, and you can make money from that. So options, I think, in this environment really is the way to go. But so having said that, from a swing point of view, I'm not really looking to do much of anything. So from a news point of view, don't necessarily care too much what happens one way or the other. Just really focused on the support and resistance levels, and then play it out intraday, playing those intraday trends, the volatility that comes with it. As we're wrapping up earnings, we have some news coming out later this week. How are traders going to react here? If we get a big pop over this resistance level that we're at here on the SPY, while I think you could have some caution, as far as bringing in new demand, there could be a lot of stops that start getting triggered, and that's going to start to bring in a good amount of momentum to the upside, just as far as them covering, and that could have a spillover type effect into getting some new demand at least interested to where they may start to tiptoe in. So that's something I will watch for. I think that could be interesting in that do the shorts getting stopped out begin to trigger more momentum coming into the upside? And then, of course, the flip side is, if we do start to break lower, what is that threshold to where traders are saying, now it's the end of the world, bears jumping out the window and things start to collapse? Where is that level? You could argue it's the 200 MA on the SPY, and that does line up with a pivot low, so that may very well be where traders are focused on. But those are the things I'm going to be watching for. You're muted right now, by the way, Wiz.
One.
You're muted again.
Okay, that sounds good, Kurt. Couldn't agree more with a lot of you just said. Jim, how about you, man?
Well, I tell you, the markets have been very, very unstable in the last 60 days, and I don't think that is something to be dismissed. So having said that, if we were to get back under 2050 and back under 2000, then the slippery slope could be very, very significant. And again, the strong dollar and relatively strong dollar, and the printing presses that have gone on in Japan, and now it's going on in Europe, and then the Fed certainly being hesitant to doing any tightening while you see the whole world is easing. That environment and the deflation of oil back down into the mid-40s, and the gold and silver slipping, and the agricultural products having a hard time moving. The macro picture here, we're going into this new election, and we're going into new guys running the show. History has been very rough on the changing of the guard, and so on a macro view here, in the next 12 months, 6 months, 12 months, you got to watch these markets, I think, pretty closely, because if they start slipping and the mood starts going to a big drop in the euro, or a devaluation of the Chinese yuan, which they did already this year, and there could be a lot of different things. So you got to follow these numbers pretty good. And again, the big concern that I would have coming forward is that at some point, weak GDP, weak numbers, revenues dropping at many companies, you just can't ignore those forever and just say, oh, we're a little bit optimistic. Well, we're on the all-time high in the history of mankind practically, and you need a certain amount of gasoline to keep that truck going.
Yeah.
And so my concern would be of a more a big picture thing is that if this market started to get under 2050, if it got back under 2000, if the news started to come out either in Q4 here or Q1 that made people think 6 months or 8 months down the road things are going to come off the wheels are going to come off the bus a little bit. There's not a lot of liquidity up here at these higher levels as we saw back in August. If people really want to come out of this stuff, there's not nearly enough buyers to take huge sizable sales in at the all-time high in the history of mankind. So you got to be very careful up here, somewhere between 2000 where we 2100 where you are, 2150 area, maybe a little bit higher. Got to be careful in Q4 and Q1 because if it does roll over from these levels, it could be a rough racket to get liquidity to buy a significant amount of selling.
I couldn't agree more, man. And it's not like our Fed is the quote national team like they have in China. You know, Goldman Sachs report a couple of weeks ago said that the national team, the PBOC, all their pension funds, the government in China owns 9.2% of the float. So I don't even think Mama Fed can step in. I mean, I remember Ben Bernanke testifying in front of Congress one time, essentially given, I don't know if it was the House or the Senate, giving his Scotty from the Enterprise impersonation almost. He's like, I'm giving you all I got, but the Fed can't do this all, folks. You guys got to, turn this economy around as well. And one of the things I put out to my traders, it's a little wizism, interest rates are low, stocks will grow. Interest rates are high, stocks will die. So as we start getting, not if, but when she starts raising interest rates, man, these share buyback, all this cheap money dries up. And not only does the cheap money dry up, somebody did the math the other day, and I wanted to write it down, but when interest rates go up, you think $19 trillion in debt right now is a lot of debt. We are skating on these low interest rates, at least the government. So not having a lot of liquidity there, Jim, I couldn't agree more, man.
Yeah, and the one signal we're seeing a little bit is in the high yield funds. A lot of these have gone from $9 and change down to $5 and change. They've cut their yield, yep. And so every cycle has an Achilles heel. Was it leverage buyouts in the 80s? Was it .com in the 2000? Was it the real estate loans? Now people are going, well, what's going to be really the cause here? Well, the cause
Correct.
could simply be these corporations who've issued $9 zillion worth of bonds. People knock on their door and say they want their principal back, and once the corporations stop laughing at them because they don't have the capital, people will find that joke very, very hard to buy, and it is a domino effect. If this guy defaults on this and then the word gets out, that's how the mob gets crazy.
Got it. AJ.
So I'm actually going to share my screen. Bringing us back in, of course, I always give my followers a list of priorities of things to watch during the week, and of course, anything having to do with FOMC policy is high on the list. In fact, it's number 1 on the list. But for this week specifically, which I think is what the question was all about, definitely already paid attention to manufacturing for some reason, even though that's not a major component. It gets a lot of focus and it gets a lot of money flowing. Also focusing on the whole employment picture, and exactly what you said. I've seen it go both ways. Good employment numbers cause bad juju in the markets, and then I've seen it the other way around. And so I'm actually going to be taking some data points on Wednesday and on Thursday with regard to what might happen on Friday, just to see reactions. Are the reactions positive to the reports or negative to the reports, to kind of get an idea what might be happening on Friday. Also, I feel like I'm seeing a lot of reaction to anything having to do with housing, so I'm paying attention to the mortgage application numbers, and I'm also paying attention to, I think that there's another housing report this week somewhere, something having to do with housing. I'll be paying attention to that. That's on the news front. So those are where my radar is. Coming over to my charts, I'm watching very closely a couple of different pieces. Number 1 is this overhead resistance that you guys have been mentioning. What's going to happen there? And I'm actually, like I've been discussing earlier, with respect to I'd like to see some relaxation for a little bit before we head higher into the holiday season. So I'd actually like to see a little bit of a pullback anyway. So I'm preparing for that this week. So that's kind of, I'm watching this level here. I'll just draw a little line. And I'm watching this level here. And that's what I'm watching for this upcoming week.
So, AJ, you're right. It's interesting in Bizarro market, anything can go wrong. Or right. You know, a good jobs report might be viewed as, hey, it's a good jobs report, and bad jobs report might be a bad jobs report. But usually during the Bernanke, 85 billion a month, spree, that bad news or the awful news ended up being great news. But
right.
in this environment, sometimes a beat or a miss can be viewed a little bit differently.
And to be completely honest, I'm not, for my own portfolio, I won't be trading very much directional this week. I'll be trading most of the volatility crushes coming off of earnings, individual earnings.
There you go. That's a great idea. It's tough to, in this market, I trade weekly options. I definitely don't do weekly options, around the S&P 500, Dow, or Russell in a jobs week, because literally in Bizarro market, it could be it could be a coin flip. In the quote-unquote old days, which all of us can kind of remember before the financial tsunami hit us and got government involved, bad news was bad news, But as you can see, with a lot of our macroeconomic data, that isn't necessarily the case. So I think AJ nailed just about everything I was going to cover. Let me just share this real quick, because I'm looking at the same events AJ's looking at. One of the things that I do here at TGO real quick, let me show you, is we talk through SOT, Strategic Operational Tactical, because a lot of average retail traders that we deal with are very, very tactical, meaning, for example, when I do a live trade brief that I usually do at 1 o'clock today, but I'm hosting this, I do a strategic brief. I mean, literally, we have to talk about what's going on around the globe, macroeconomically, politically. I mean, last Monday, the market opened up down because of China's GDP miss. I got to be honest with you, I thought, based on, you guys all saw China's PMI yesterday, the PMI was in line, but their non-manufacturing PMI was a miss. And I thought dollars to donuts, we'd open a little bit down today. But, political issues, even military issues. I'll tell you about year ago, not too many folks listening to us right now could probably point to Crimea on a map, but here we go, headlines, CNBC briefing that Russian troops are seizing Crimea. There goes the futures down 600 points. So I like giving a good strategic brief and then getting operational and focusing on, hey, now let's get domestic. What's going on with futures, the Fed, corridorable goods, housing, some of the stuff that AJ rattled off, and then we get tactical, and then we can look at trades. I don't call them option strategies. To me, there's no such thing as an option strategy. A strategy to me is saving for college, saving for retirement, short-term income generation, managing risk. A tactic, an iron condor, covered calls, buying puts, those are tactics that support a strategy. So I'm not going to waste too much time seconding AJ there, but I think he did a great job of saying all the events that I'm going to be looking at this week, and not just domestically, folks. You really do have to look at overseas events too. Where I think Mario Draghi today came out and said. Here's the headline. Mario Draghi admits global QE has failed. The slowdown is probably not temporary. Well, welcome to the party, pal. So, you really have to listen to these folks when they talk too, because they can move the markets. And I think you said it, AJ, or maybe one of the other guys. Ms. Yellen is she's testifying this week on Wednesday at 10 a.m. So that might be a market moving one. She reads prepared remarks, and then she has a Q&A session, and usually some of the Republicans will grill her, and some of the Democrats will show her softballs, but that's about, and there's a couple other Fed lieutenants speaking throughout the week as well. Some of these Fed lieutenants, folks, you have got to keep an eye at. Lockhart, some of the bigger ones, the Dallas and the New York Fed folks, no offense to St. Louis or Milwaukee or wherever. There's 12 Fed lieutenants out there. No offense to some of the smaller ones, they just don't get listened to. But these guys, can move the markets. I remember 2 years ago, I forget which, I think it was the Dallas guy. He said something like, so a reporter asked him, like, well, what are you going to do if none of this QE works? He's like, there's no plan B. The market, literally, when he finished that sentence, the market went up like 100, 200 points. It's because there's no other choice, other than to keep doing what they were doing at the time there. So, so that's what I'm going to be looking at next week. That was a long and rambling answer to that question, though. Let's go top to bottom on that one again. Real quick, Kurt, Jim, and AJ, if you guys wanted to add anything, because I know usually when we hear each other talk, sometimes that lights a couple sparks. Kurt, anything from you, man?
I do agree with everything that you guys have been saying as far as things to look out for and all those talking points. The only thing that I have to also throw into the mix is that while you want to be aware of those things, you have to also have a plan as to how you're going to take advantage of these things. What's going to be your trigger signal? It's one thing to know these things, but when does the market actually start reflecting what's being spoken about? And furthermore, maybe it's already priced in. Maybe you're looking to do something that's now going to be after the fact. And it's going to do the opposite of what conventional wisdom may suggest. So, again, being aware of these reports and some of these more macro type of discussionary things is important, but at the same time, how are you going to take advantage of it in terms of the market? When does that signal that tells you to now do something take place? What are you looking for? And so that I just kind of want to leave with that, or at least make that point.
Mm-hmm.
Okay, agreed. Jim, any other thoughts?
Well,
on
the only thing I was going to add as far as the market is that it has been very disrespectful to a lot of trend lines and a lot of moving averages in the last 60 days. I think that is pretty obvious. And so how much confidence you can put into each technical indicator you normally would have respect for is hard to say. And we went way down, and now we've gone way up. So it might just be a liquidity thing that people are not recognizing, because these order imbalances have been a big factor. And during the drop, of course, was a big factor, and this run-up from 1,800 and change all the way back up to 2,100, that would indicate that there's some order imbalances on the buy side now. So that's why liquidity is a big issue, and that's why slipping back under 2050 and back under 2,000 with news behind it could cause volatility either way. And of course, if we get through 2135 and 2150, there could be some shorting out there that would have to cover into a illiquid environment. So I think the next 2 months, 3 months will be very interesting here to see what we can do from this rally. Is this rally for real, and is it going to be sustainable? And if it's not, then obviously the slippery slope could come back into play. And at this point in time, the jury's still out. Right now, you have to be somewhat positive on the market because it's above a lot of the resistance. And but then the question is, can you trust it? And only time will tell, and price evidence will tell if you can. But this is definitely a time where you'd want to monitor this rally. You'd want to be very very particular on the prices. And then, of course, if weakness does come back in with news behind it, especially, you'd want to respect that.
It's interesting because Jeffrey Gunlock, he's from Double Line. I mean, that guy's swinging $66 billion around in capital, and a couple weekends ago he said the only thing we're up here on is hope, and hope ain't a strategy. So, as I like to tell my traders, make sure you got an ejection seat handy, whether it's straight up buy-in puts on the RUT, S&P 500, whatever it is, bullish double verticals on SDS. Make sure we don't go down forever. I mean, we survived the 2008 tsunami. It took some time to get back on our feet. We got punched in the face. But that's why longs are called longs. I got a lot of positions, long-term bullish on China or some of these other areas out to January of 2018. Now that the Jan 18 series are out there, so if I'm going to get kicked in the gut, at least in the front month, let's try and profit off it a little bit. Hey AJ, how about you, man? Final thoughts on those comments?
The only last thought I have is what Jim pointed out. I can't agree more about seeing all these imbalances more than I've seen for a while, and so I'm watching those, and definitely everything is being hedged. That's all I've got to add.
Couldn't agree more, man. That's exactly right. I never went flying over Iraq and went to maintenance control before I got airborne, and the chief said, "Hey, sorry, Lieutenant, your jet today doesn't have an ejection seat." That ain't. I'm not that brave. There's a fine line between bravery and stupidity, and I really believe at the end of the day that trading is a form of combat because somebody wins and somebody gets their ass handed to them. All right, I'll tell you what, folks. In our last couple minutes remaining, always got to try. Of course, since I'm here and I want to get a free trade, let's try and squeeze a free trade out of you. It doesn't have to be short term next week. It could be a couple years out. What are you looking at for the folks listening? What would be a good target of opportunity that you could direct some of your folks or all of us who are potentially wanting to learn something about you? What are you targeting into right now, Kurt?
As far as the market goes, the Qs, you kind of have to be bullish on it. I know I've kind of been saying that, but as far as a longer-term trade, definitely buying the breakout there that we've been seeing the consolidation from last weekend into the start of this week. But then, on a more kind of Forex front, not that we've really spoken about it much, but the Euro US dollar's been in a pretty nice tradable range off the weekly time frame. So looking to play just the top and the bottom of that range, even though it's not a directional bias in the sense of trending higher or lower. A lot of times those sideways trends, if you can identify them as they exist on those longer term time frames, you can just pick the top and the bottom off of those and make some really nice wealth building type of income.
Okay, awesome. Jim?
Yeah, as far as trading rec goes, Option Professor doesn't get involved in that because mostly we do the education on all the different tactics and the trading of options, rolling them up, rolling them down, and that kind of stuff. So I just wanted to say one thing, though, as far as, some of this information we talk about obviously may already be factored into the price. We don't know. And so just to give a little quick idea out there is that we've jumped up back above 2,000. We're pressing up to 2,100. The former high is 2,135. With the type of squeeze on the short right now, could we go into a little bit of a new high territory? That's certainly possible. Anything's possible always. But I would just keep an eye. We're at the end of the fourth quarter here within 60 days, and then we're into the new year. And the new year brings the new president coming at the end of the year. So just, if the market goes a little bit higher, continue to monitor it because, like I say, the Russell and the New York Stock Exchange Index, which are broader-based indexes, have not gotten above their 200-day average. So maybe somebody's wrong here. Is the S&P and the comp, the NASDAQ wrong? The Qs, or is it the broad-based indexes? And maybe we'll know that sooner rather than later if these markets either roll over and start acting like the larger, the wider scope indexes, or if the wider scope indexes start jumping above their 200-day average. That might be helpful to everything across the board. So it's going to be pretty exciting, I think, in Q4 here as we close out the year, and in Q1 next year to see if this rally is for real or if it's going to give it up as we go into Q2 of 2016, which sounds like a long time away, but we both know how quick time goes by.
That's exactly right. Good summary there, Jim. And AJ.
All right, I'm going to share my screen again. Here's what I'm going to give off is that again, I mentioned very quickly that I'm trading some implied volatility crushes this week, and I look for IV charts that look like this around earnings season every time, and I'm trading option strategies that allow me to profit on the change of IV every time the earnings are released and people get the feeling. And the key here, though, is this is a
Hey,
little
AJ,
bit
real quick,
different.
can you make sure you click share? I'm not seeing it.
Oh, I apologize. Of course,
I
my
might be the
drawing
only
is
one.
just me on my chalkboard, and it ain't that pretty. The the key is
There we
that,
go. We
of
got it.
course, the key is, of course, is that we had this move in August with the whole China scare and all of that, and it caused a bump in IV that's causing these pieces. It's almost like a DC offset for you nerdy engineers like me out there. And you just got to make sure that you're reading the IV chart. But remember, those option strategies profit on changes of IV. So if we can see a 10%, 20% change in IV, and we pick the right Vega component, we're good to go this week, and we don't have to worry too much about some of the stalls that are happening, or so I'm thinking a little bit more short term, but this is what I'm trading this week. And so if you guys just go to like a free tool at cboe.com, and then definitely, if this is not familiar with you, I don't want you to just sit on one side. I'd like you to paper trade it, because you can learn a lot by actually getting in there and doing something instead of sitting on your hands. So give it a shot, right? Even if you don't feel comfortable with the strategy, you can't lose anything by giving it a shot with a simulator or with your paper trading log. And just go look for some of the IV charts that look like this, even with the hump that I'm talking about, and see if after earnings you could have made some money with your paper trading log, and maybe next quarter you could tee this up with some real money. That's my 2 cents.
AJ, that's a great analogy, man. I didn't read a book on aerodynamics and run out to the F-18 and try and get airborne. I mean, that's how you that's how you get killed pretty damn quickly. What we did was we went over to the simulator building. And the fidelity in the simulator building is just about almost as real nowadays as the plane itself.
True.
I mean, literally, you can literally join up and fly formation on a guy in the simulator, and the guy will look at you and kind of wave a little bit. I mean, the fidelity is incredible. So you're absolutely right, man. Before you ever squeeze the trigger on any real capital, and David did a great job, in his report here, because if you look at a lot of the responses, it's advice to people who are looking forward to investing. What the hell does it say? Paper trade, simulator, paper trade. Look at all of this stuff. Discipline, demo account until you feel confident. So that's a lot of what we call lessons learned in the military. Why go out and reinvent the wheel when you can stand on the shoulders of other folks? For me, let me just share. Like I said, I do. We got some weekly options. I put on a bear call spread on Apple for the week. I sold 75 of the 122 calls and bought 75 of the 123 calls as a hedge in case we see some sort of rip your face off rally. I trade almost every week weekly options on Apple except earnings week, because that's a coin flip. Nice 64% probability of making $1,700. Risk is a little bit north of my $5,000. I usually don't want to risk more than $5,000 of my model portfolio on any one account. Why? Model portfolio is a $100,000 account. That's my rule of engagement. 5%. Some people are 2.5. Some people are 10. Some people who are idiots are 100. Some people are 1. I don't know. Can't give you advice there. They got earnings coming out. When was that? Thursday or Friday-ish or something like that. And I'm selling a little into that pop. But that's I'll keep a little bit of my secret sauce as to why I'm putting that trade on, so you can come to TGO. So I'll actually do that right now. Let's go top to bottom and wrap it up. Kurt, why don't you tell us about what we can see from you over at Pristine, and how we can check out what you do, man.
Yeah, absolutely. Going to the website, www.pristine.com, you can see on the right-hand side a list of all our free webinars, and so I would definitely encourage people to come register for those, check us out there. And we also have a trading room that you can get a free 1-week trial to. You just have to email us, and we can get you set up with that, no problem. You can see the method in action before, having a look to invest any money in your education. And so those would be the first 2 places I'd suggest going and checking us out from, and get a little more acquainted with us.
Awesome, Kurt. Thanks for coming, man. We appreciate it. All right, Jim.
Hey, thanks. With regards to OptionProfessor.com, they do have the 7 option learning DVDs that I put together for them, so I'm the content provider on it. And it goes the gauntlet from the covered writes all the way through put writing, as well as strangles, straddles, credit spreads, debit spreads, rolling and repairing positions, and again, to go over the use and the risk of each strategy so you have a good idea of what's going on. And then, of course, with those tactics in hand, you can start finding out what strategies may or may not be appropriate for you on your own. But there's a lot to learn in this stuff, and with the 7 option DVDs, there's no question you're going to be smarter after you pick those up.
Awesome. Thanks, Jim. Thanks for coming, man. And AJ.
And I definitely want to just jive with you one moment with the analogy with learning how to fly a plane, because you can't really buy a book to do that, and you can't buy a book really to do some trading, even though if you walk down the halls of Barnes & Nobles, you'll see tons and tons of books that make you think that way. But we've got a program over at Trading Trainer that's a year long, and it's to help you build that skill, and we hand-hold you through the process. We've got some tools and accelerated learning techniques where we learn while we earn. Again, we start off with the simulator and the paper trading log and then phase in real money. And that's how I think it's got to be done. I think that you have to understand, you have to have a frame of reference that you realize it's a skill like learning a language, learning how to drive, learning a sport. Gosh, learning how to tie your shoes when you were a child, right? It's hard at the beginning, and then it becomes unconsciously competent for you. So we want to make that happen in a year so you can leave us and be successful. So we've got that promotion running right now. We're actually closing down the shopping cart this week. We've got it both at TimingResearch.com or secretoftrading.com, and we're basically selling 1 year part of our program for it's 12 months for the price of 10, and we waive all the activation fees, so it's kind of a no-brainer. And yeah, we've had it open for 3 weeks, so I hope you come and join us, because this is the last week that promotion's running.
Awesome. Sounds like a plan there, AJ. And to AJ's point, a lot of the survey responses this week also said find a good mentor, find a good mentor, find a good mentor. I mean, folks, even Tiger Woods, one of the best golfers in the world, has a swing trainer. A putting trainer. Even the best in the world have trainers. So find a good mentor. Sounds like David does a good job every Monday of getting some of the best and brightest together in the business to be mentors. So reach out to us if you have any questions or concerns. As you guys know, I'm Matthew Buckley. You guys can call me Wiz from TopGunOptions.com, and we do live trading and training throughout the week. I really shudder sometimes when I hear the term financial education. The world's full of educated derelicts. Fighter pilots are trained, traders are trained, doctors are trained. Hell, a plumber is trained because training gives you a skill. Education, just run by any of your, quote, local universities and see who's providing our kids, quote, education, and I'll leave it at that. So you guys can stop by TopGunOptions.com whenever you get a chance and check out what we do. So David, with that, I'll turn it over to you, my friend, to wrap it up. Thanks for having me again. I appreciate it.
Yeah, definitely. Thanks, guys. Just want to remind everyone, you can go to TimingResearch.com/reports to download this week's report or any past reports there. Also, next weekend or later in this week, go to TimingResearch.com/current survey, and you can fill out the next survey there and then get the results Sunday night. And so I just want to thank Kurt Capra of Pristine.com, Jim Kenney of OptionProfessor.com, AJ Brown of TradingTrainer.com, and thanks, guys, for being back. And, of course, Matt Buckley, Wiz of TopGunOptions.com. Thanks for moderating again. And
thank you.
Thanks, guys.
Thanks, everybody.